All right, guys, welcome to a live trading demonstration from Theta Trading about what we do and how we do it. So this is one of my accounts here. It's one of the accounts I have here. Of course, I've blocked out some of the more personal information, but I'm going to walk you through a few trades. Okay, so first of all, let's take a look at our watch list. So as you know, we only write puts on stocks we want to buy that we are more than happy to buy at a discount. Okay, so that is the basis before every decision we ever make in terms of trading. So is it a company that we like? Are we happy to buy at that price? And do we have enough money in our account to do so? Okay. So today is not the best day in the market. Markets are down pretty good. So I'm going to look at my watch list to see how various stocks are doing. And I can see here Apple, and I've got a bunch I don't just watch. I don't really trade them. We just watch them. And there's a bunch of different positions here. But today is a down day in the markets, and due to something called seasonality, the next 2 weeks of the stock market are the worst 2 weeks traditionally of the entire year. So we're not going to be overly aggressive here, but we are going to enter one position today, okay? And again, that's because of seasonality. It plays a large factor into what we do on a day in, day out basis. So we're going to take a look at the universe of stocks that we trade, and we have decided today to place a trade on Apple. Okay, so let's take a look at Apple, and here's Apple here. It's trading at $107.90, so it's down a little bit for the day. We're going to take a look at where we want to buy it and what price point. Okay, so we're going to take a look at the graph here, and the graph here shows that the 50-day moving average is at 110, which means it's just gone below the 50-day moving average. The 200-day moving average is at $84.26, and the lower Bollinger Band is at $98.53. Now that has something to do with standard deviation, and that's very important in our decision-making process. So let's see what this pays us. Okay, so let's take a look at Apple, and we're going to go to October 16th. That's just after the poor period of the stock market. The markets generally start recovering around the first week of October. So we're going to take a look at a 98 put and see if it makes sense for us around that price point. Okay, so we see here that we can agree to buy Apple for $97.50, and it's paying us anywhere from $1.84 to $1.86. So let's take a look at that. So $1.85 to $1.86. So we're pretty happy with that. So we're going to go ahead and put a sell order on this. Okay, what that means is, on or before October 16th, 2020, we are agreeing to buy Apple for $97.50. Now, the reason we have no problem with this is because we're more than happy to buy Apple at that price point. Furthermore to that, we're getting paid $1.85 approximately. Now, we take the $1.85 and we divide it by our strike price, which is $97.50, and that works out to 1.9%. Okay, so 1.9% for approximately a little less than 30 days. So that's a good trade for us. So we're going to go ahead and enter that trade. So we're going to put it at $1.85, and I'm just going to enter the trade here. So it's submit to sell, and there we go. I'm going to see a bunch of warnings, and there we are. Our trade is in. It's trade submitted. And it's a very simple concept. We've agreed to buy Apple, for $97.50. Up and until October 16th. If it doesn't go to that price point and stay below that price point, well, then we have no further obligation. We keep the whole $1.85. And that's a nice 1.89% return, 1.9% return for a little less than 30 days. So we're really happy with this trade. We're happy either way. Every single trade that we enter is in the same fashion. We have to be happy to own it regardless of what happens. So let's take a look at what's happening here on Apple. So we're $1.83 to $1.85. So we're going to have to wait for this to kind of go through. So what we can do is we can always modify our position. So $1.85 doesn't seem to be going through. So why don't we drop this to $1.84 and let's see what happens. So we've modified. Oh, there we go. Order has been filled. Okay, so that means we have sold one contract of Apple at $97.50, and we received $1.84. So just shy of 1.9% now because we got 1 cent less for a little less than 30 days. So the return actually might be a little over 2% for the month. And our downside is very limited, right? Our downside is limited to owning Apple at $97.50, which we're more than happy to do. So again, this is a win-win situation for us. Every single time we enter a trade, this is the scenario we enter. So let's go take a look at it and see how this, and we can see it populated in our account. Just gonna back out of here and go back to the portfolio, and there it is. So we've agreed to buy Apple at 125. We agreed to buy it for 110. We agreed to buy it for 120, and now we've also agreed to buy it for 197.50. And again, this has to be the case every single time. If it's a stock that you don't like, that you don't want to own, well, for us anyways, we won't agree to buy it. Okay, so like I said, it's a rougher time of the year, so we're not going to be super aggressive. I'm just going to do this one trade today. I'm not going to do any more trades, because if I do any more trades today, the next 2 weeks could get kind of rough. Maybe even the next 3 weeks could get kind of rough. So I want to make sure we have plenty of money left over in case other opportunities arise down the road. So we're going to kind of go into this on a phased approach, and that's how we approach things at Theta. We do take seasonality into account, and what that means is, just to reiterate, certain stocks do well during certain times of the year, and the markets do well during certain times of the year, and it doesn't do well during other times of the year. Okay, so the period that we're entering now, September, and particularly the last 2 weeks of September, are particularly bad. So we're going to be a little bit cautious here and not be overly aggressive, okay? Because Apple might go down further, which will present us a better opportunity. But for now, we're happy with this opportunity. So I hope that makes sense, guys. Thank you for watching this trading demonstration. We're going to have some more coming out soon. Take care, and we'll talk soon. Thank you.